Hello, welcome to the Stockout. This is your show about all things related to the retail and CPG industries. I'm one of your hosts, Mike Baudendistel, joined by Grace Sharkey. Grace, how are you? Did you watch the football games yesterday?
Yeah, I watched the football games. Yeah, it was so close for the Lions, just so close. But as the classic Lions tradition, there's nothing like a nice lead that's followed by just a complete crash to the floor. So I wasn't completely surprised by it, but it would have been nice. It would have been nice to know that was happening.
Yeah, and what was so disappointing about it, like I wasn't expecting the Lions to win going in, but then they got up by 17 at the half. I'm like, wow, this might actually be the time after the first potential Super Bowl appearance. But no, it wasn't to be. Sort of tradition, I guess. So before we get into it, what we're going to talk about today is a lot about data in the retail and CPG industries, how retailers and CPG companies collaborate on data. They really are getting more sophisticated. We have some good examples of that. I found something in the retail press, which I thought was one of the better articles I've seen in really a long time. So we'll talk about that. And then we're also talking, get a little bit of an update on Carrefour and Pepsi. That situation, a little bit about the freight market. If we have time, we can talk a little bit about Gen Z turning away from alcohol, which I think is interesting, has big implications for those CPG companies involved in beverages. But before we do that, I want to make sure everyone knows how to sign up for the Stockout newsletter, which goes out once a week. You just go to www.freightwaves.com/the Stockout or /subscribe, and then go up at the top. You see there, if you're just freightwaves.com, go up to newsletters, and the first one is under supply chain. So pretty easy there. And with that, I'll talk about our first topic here, which is Walmart sharing more data with suppliers. I think this is also true of the big retailers. And the data sharing in the retail space, just the value of the data has really increased lately. I think it was the ultimate rationale for Kroger acquiring Albertsons is that combined company now has, I mean, assuming it closes, which it hasn't closed, but if it closes, it'll have
Yeah.
data on over 100 million US households, which is pretty much everyone who shops at a traditional grocery store. And there's all sorts of things that the companies can do with that. I mean, you think about targeted advertising. The CPG companies can pay to get in front of customers that are exactly the customers that are potential for their products. But we got some more detail from a retail Touchpoints article which came out, and I thought this was really well done. I would encourage everyone to go to Retail Touchpoints and check it out. But they talked about how that Walmart is sharing data with suppliers, and there's a couple different tiers of service where they'll share some data with suppliers that is free. That's they'll give them a sense of sort of how, what their category is doing, how they're doing, relative to that category. But then if they really want to get into the weeds about all the demographic information, all the data that they're collecting on customers, kind of what else they're buying, sort of all these sales trends and various surveys, like some of the Walmart customers will opt into certain surveys, which really helps them to put a story around a lot of this data. And so if they really want the high-end service, it's something that Walmart is monetizing. So the retailers, it seems like the retailers are thinking about the data as a high growth, high margin revenue stream. And I think it's something that has, Wall Street excited. You see some of these big retailers, like a Walmart stock chart here that shows Walmart close to an all-time high. And then there it is. Walmart shares hit a all-time high late last year and is still close to it. But you think about Walmart's, the data that they have, it's 150 million transactions a week. So they're one of the first companies to see when there's a pattern in terms of switching what consumers are buying, and all of those things. And it seems like they're really in a unique position to help suppliers. And what did you gather? You found some things on social media to that effect.
Yeah, I mean, I've actually followed this a few times. I brought it up, forever ago when we were doing point of sale as well. I think this is incredible. I mean, for anyone who's a shareholder of Walmart, look at this as another avenue that they can grow into. I mean, you touched on it. the amount of transactions. I think they brought up 150 million transactions per week, but also the fact that they have over 37 million daily global customers. I mean, think of all of the actual data that you could use and, of course, propel more sales within your business or your brands if you were selling on Walmart, either on their third party selling site or directly into their stores as well. And I mean, the best way to kind of look at this is their way of truly becoming a strong competitor with Amazon.
Mhm.
They there's a couple of spaces. Actually, if we can pull up really quick a CB Insights kind of chart that they had, showcasing a little bit of their strategy. I mean, if you look at their offerings just on an overall omni-channel scale, they're competing very heavily. Not alone, let alone the drone delivery aspect that they're definitely over. I think they're definitely beating Amazon on at this point, but right on track to have full implementation of demand forecasting as well and inventory management, which I think goes into a lot of what they're doing with the ad data that they're also grabbing and giving back to their customers too. Illuminate, I think people should really listen to and focus on when you hear Walmart doing their earnings, because they bring it up all of the time. They understand exactly what they can bring in from the advertising side of things. And I think it was a couple of earnings ago, they had brought up the fact that they think by last year that they could get up to at least $3 billion in revenue generation just from the advertising segment of Walmart alone. So I have to
Mhm.
look and see what they actually hit this year. But I mean, yeah, it's. I definitely think it's a whole nother revenue stream, and it's one I think that's going to make them even more comparable as a brand. If I'm looking for a site to service or to sell on, Walmart is one that I think people have to might not have expected to look into. I think, right? Amazon was number one go to, but Walmart is definitely a competitor that people should be checking out.
Yeah, and they gave some really good examples in that retail touch point article. I think we should talk through those. So one of the
Yeah.
examples was Red Bull, and they looked at the data and they showed that Red Bull, their sales were primarily impulse purchases. I guess someone going to the store and was just really tired and needed a Red Bull and got it at the checkout counter, and they were really doing lousy online. And part of the reason for that was just they didn't have the right selection. Maybe you need more cases online. You're not going to buy one drink online, and they were able to
Mhm.
fix that by looking at that behavior. And then they also just by changing the assortment of what was available, and a lot of the consumers that were looking at that online didn't know that Red Bull even offered on site. So they made that they sort of saw that gap there with the data and realized that consumers need to be aware of Red Bull because it was just so underperforming online. So that was interesting. And then the Bimbo bakeries, which even if that's not a household name, I think a lot of the brand names that fall under that are. And there, what happened was essentially Walmart was sending them, data to let Bimbo bakeries know how to allocate the shelf space that they had. And this company, it was the pay from scan proposition, where essentially the Walmart doesn't pay the supplier until there's a retail sale. So that really puts the onus on the CPG company to move that inventory, because so the CPG company, when under something like that, really takes all the inventory risk rather than the retailer. And
Yeah.
so the more data that they have, understanding how quickly these products are turning, knowing where there's inventories are heavy in certain places, helps the CPG company to allocate that space properly. And it's just even more critical when you do have a pay from scan proposition. And then the other example they gave was Procter and Gamble, one of these cleaning products. They decided to go ahead and launch a premium cleaning product, even though they were at a time when consumers were cutting back on spending, but they did get um, feedback from consumers that they were willing to pay for convenience if they were able to clean something more efficiently. People's time is valuable, and that was a lot of the feedback they did, and they went ahead and launched the product. So they gave some good some really good examples there. Did anything else stand out to you?
Well, it's just the incredible thing about data is that it tells the truth of the story of your products, right? And I think that's uh, and being able to actually get that honest reporting from Walmart and showcase, like just like you said, you would think during these times that like most consumers wouldn't be willing to upgrade or to even pay more for a better product, but in this case they are, and I think that's the best part about seeing these companies really understanding the data portion of their business and how clearly not only are they going to attract better brands to their stores and to their sites as well, but bring more customers. It's a whole different buying experience, and just I'm very excited actually. Like this, we talk about the Super Bowl in particular, like seeing what Walmart Plus ads we start to see, right? For those that are shopping more online and seeing
Mhm, mhm.
I can guarantee we're probably going to see a big celebrity in a Walmart Plus ad this Super Bowl, and that's I think that showcases you how serious Walmart is taking their overall shopping experience that might be online considered just instead of just considering what's happening in the store, what's happening on the shelves physically.
Yeah, and this whole discussion is Walmart providing data to the CPG company, but it's worth mentioning Walmart's getting more demanding of data from the CPG companies as well, particularly when the CPG companies want price increases. Walmart or
Sure.
the retailer, they want to know why, and they want us to be able to trace that price increase back to a certain ingredient, or because I mean they're making a lot of the competing products on the private label side too, so they have a pretty good sense, very good sense of how much those products should cost. So there's also, I think, burden on the CPG companies to provide Walmart and the other retailers with data. So I think data really going to be a big thing going forward. You do see kind of analogies between that and FreightWaves, the importance of high frequency data, the importance of the granularity of the data, and really sort of putting the why behind the data, sort of putting a story around the data, which is part of FreightWaves why we have market experts to contextualize all of those data points. I want to move on to an update. We talked, I think it was last week, on the Carrefour and Pepsi situation, and it was even in the articles that came out when it was announced that Pepsi and Carrefour parting ways, at least temporarily, that there was influence from the French government. But there were some articles that came out in sort of the trade rags that gave some detail on that. And part of the detail was this finance minister in France threatened to use tax measures to recover what he considered to be excessive profits, or name and shame companies that had prices that were too high. And so that's kind of what it came to. And so there was an agreement, some of the agreements that were already in place between the CPG companies and retailers, they went back and CPG companies lowered some of their prices. It's just to sort of appease the French government. So really kind of a unique situation there. And it strikes me as this is maybe not something that is going to be as pervasive, I think, in other countries. I'm just very kind of interventionist, from my perspective. I mean, there are a lot of things that go into ultimately the price of CPG companies, and it maybe makes me think that it was Pepsi that decided to pull out. I mean, Pepsi said it was their decision. Carrefour, the grocer, said it was their decision. But if I'm a CPG company and I'm being forced to take prices to what are just really an unreasonable level, some of these companies will make 35% margin elsewhere if they're not earning a margin in France at this one retailer. I can sort of see them pulling out. I mean, what did you think about this situation now that we have a little bit more detail?
I partly wonder if the quickness to the threat has a little bit more to because if I remember correctly, I think now there's even dealing with a number of protests from farmers as
Mhm,
well in
mhm.
France. So part of me just wonders if it's a little bit more of the atmosphere that's happening right now between the government and clearly its citizens. If it's one of those things where it's like uh, a perfect timing, perfect moment to kind of to say this threat and have something change. I wouldn't expect it to be like a long-term policy shift or something like that, to be honest with you. Again, I feel like it's maybe in the now a little bit more than uh, clearly because of what other issues they're dealing with. Uh, I'd like to see how long this sticks and if they stick with it. But again, I think, I mean, it's tough because like what happens, right, when one of these companies deals with another shortage type of ingredient? Are they just supposed to eat that and not pass any of that on to the consumer? I highly doubt that would happen. And with, of course, a lot of the geopolitical issues we're seeing, that could happen at any moment, and then add on uh, even elections happening across the globe and different opportunities that we could see with different leadership in different places. So I don't know, I feel like it's maybe a more reaction, if anything else. But yeah, it does seem strange that the quick response to that. I think a little bit has to do more with the atmosphere than anything else. But it's something I think incredible to kind of maybe watch on this show and see what happens over the next quarter or so.
Yeah, and it's worth pointing out. I mean, the inflation has been even worse in Europe than it has been in the U.S. I mean, with the lack of energy independence, lack of
Yeah.
agriculture independence, in a lot of cases. I mean, what gave rise to this, rules in France and actions in France is the food inflation in 1 year was closing in on 15%. So there was that. And another stat that was interesting from the Just Food article was that 44% of grocery shoppers in France moved away from their favorite brands to save money. That's different than what we've seen in the US. There's been a little bit of trading down in the US, but I don't think it's 44% going to something that's less desirable. So it is a little bit different there in Europe. So I don't, not expecting a widespread change there. It does seem like the latest comments from Walmart and Costco suggest that you're going to start to see some of those CPG prices come down in the U.S. Just based on what management said at their latest analyst calls. But I want to move on to going to touch on I thought was a good chart. I think it might have been Donnie who wrote this up. The tender rejection spike for reefer. So this is an interesting chart. Kind of the dry van tender rejection rates are in white. You've seen that kind of creep up to 5% with the sort of cold weather here. But then you see reefer kind of up and down. Really, a few weeks can make a big difference, fluctuating between 6% to about 11% currently. And then some of the context there is the deep freeze gives rise to additional demand for temperature controlled capacity because you need to protect from freeze. So I wanted to ask you, I mean, you spent time in the brokerage industry. Does this square with your thinking, or how would you interpret that chart?
Definitely think weather focus a lot on this one, especially looking at like those past, those past three humps, including the one that we're at today. I mean, if you go back, the one in mid-November, of course, is likely Thanksgiving related, right? Moving a lot of food to, and then get into the spike into the beginning of the new year. I think that's if I remember correctly as well. We saw a lot of capacity. Yeah, van moved just with that too, so that would make sense. And then this last one, I think, has a lot to do with the freeze. I mean, we're not just talking when we talk refrigerated foods and beverages. I mean, we're talking glues and different adhesives and things of that nature that have to be set at a certain temperature. I mean, even electronics, right, and things of that nature. So I think really focusing on the temperature of these goods that protecting from freeze too is a big one. We've heard this a number of times, even in some of the earnings calls so far. I think you have to think about insurance costs too. You brought up the fact that when capacity came into the market, it wasn't so much reefer as much as it was van. I think also with reefer and investing in reefer assets, you have higher insurance costs that come with that. So there could be a number of people who are exiting the reefer industry and looking at different trailer types to pull that keeps them a little less exposed to harm. I mean, if we're seeing it in JB, I want to say Covenant Prominent brought it up too. There's one other one last week that all brought up insurance cost. That's if that's affecting the big guys, it's for sure affecting the smaller guys out there. Last two, I want to say, I mean, all of these are around holiday seasons. I mean, we've got football this week. We got the Super Bowl coming up. Some stats I pulled from 23. I mean, we had over 1.25 billion chicken wings moving, 28 million pounds of potato chips moving the weekend before the Super Bowl, 54 million avocados. It's also avocado season right now, so that's part of it. And then 50 million cases of beer, which might change based on if we get into this next article as well. But you also have Valentine's Day coming up, so you have to protect the flowers that are coming in too. So we've got, I think, a lot of holidays that are going to be pulling the reefers into certain markets, and not surprised to see that tender rejection bounce up with it.
1.25 billion chicken wings. That is an astounding number of chicken wings. Right? It really is. So I want to get into this final article that we're going to talk about. I think this is just more of a fun one, is Gen Z. Gen Z just doesn't seem to be that interested in alcohol. I mean, I think it's maybe, is it just a reaction to just the fact that, past however many years, it just seemed like alcohol is absolutely everywhere, as every possible establishment, doesn't matter what it is. It could be a library, it could be a zoo, trying to sell you alcohol to boost their revenue stream here. But Gen Z seems to be cutting back. This article is interesting. The CNBC article from late last year said in 2023, beer shipments fell below 200 million barrels. This is the first time that's happened since 1999. The population's grown, I don't know, 1% a year for that much. So it kind of implies you've taken about a quarter of the beer consumption per capita out. And then some interesting stats from just what people have reported. I mean, only about half of people aged 21 to 24 are drinking alcohol. That's like the prime age. And 40% in that group are limiting alcohol consumption. And the average consumer drinks 3 drinks a week, down from 4 a year ago. So that's pretty significant if the survey data is anywhere remotely close. It does seem like there was a huge bubble in the craft beer market, and there just got to be too many breweries. You trip over them, walking down an urban neighborhood pretty much. And then there's all these other offerings that people are turning to that are continuing to drink things like ready mixed cocktails, THC infused soda, et cetera. So you're seeing the CPG companies diversify that are, if their book of business was overly in alcohol, they're diversifying into soft drinks. And, conversely, you're seeing soft drink companies diversify into alcohol. But, what do you make of all this?
It's interesting because even I see the same kind of trends even in my own life. I definitely am nowhere drinking anywhere near as much as I was during the pandemic when we were all stuck in our homes, and seltzers were like the biggest thing ever. On top of that too, we're talking about a generation who's going into legal age where there's a big competitor in that space, and that's legalized recreational marijuana. I mean, that's talk about what some could say maybe a safer situation depending on how it's being used. But I think again, it's be interesting to see if that is more of an option for this group. Again, since they were 18, they've been able to recreationally use that instead, and it might just be a switch up there, especially with definitely seeing a lot more of the THC infused type of drinks as well. So it's I was kind of surprised too at some of the numbers. Like you said, some of these are like time of life to throw a few back after the end of the day, but maybe we wore it out during the pandemic, and this is the generation that's just not about it.
Yeah, another thing that I have found is just from social media is I'm on a lot of fitness, track a lot of fitness people. The people who wear the fitness trackers like a Whoop band or a Garmin, and they wear it all night and it tracks their sleep, like it wrecks their sleep stats. And so many people post, I was drinking a certain amount and I saw how bad my sleep was based on the Garmin or the Whoop or whatever, and they cut way back and my sleep score is better and I feel better without it. And it's like, it's like your parents or teachers could tell you all day long not to drink too much, but then you see it from Garmin and it's like, well, now I'm going to listen.
Yeah, I agree. I think it's interesting. Like I was just filling out a survey for my own doctor, and I was like, wow, I guess I don't really consume much these days, and it could just be
Mhm.
again like we've lived it out, but it'll be an interesting generational trend to track for sure.
Yeah, so his implications also for aluminum cans, the
True.
PET bottles, all of those things. And you do bring up a good point with the pandemic. I had not thought about that some people overdid it during the pandemic, and maybe it's sort of a natural reaction to that. So a lot of interesting stuff. There's always plenty to talk about in CPG and retail space. So we are about out of time, but we'll be back next week at a new time, which is Monday morning at 10 o'clock Eastern. So see you then.